In today's Money Watch, we look at Target's plan to lower prices. The retailer says it will cut the cost of thousands of items this summer, hoping to lure consumers back into the stores. Meanwhile, Americans are still juggling their short-term need for cash with their long-term financial goals. And inflation is making that much harder. CBS News business analyst Jill Schlesinger is with us to break it all down. Okay, so with inflation easing a little bit, why is Target cutting prices?
You know, they really did suffer from this inflationary spike because if you recall, pre-pandemic, Target was doing some groceries, but they really loved to get us into the stores and we'd buy something in line and be, oh my gosh, I've got $100 worth of stuff in my cart. Electronics and clothing and other things that are
They're very good at that, Jill.
Very good.
Yeah.
These are called non-discretionary items, right?
Okay.
Well, inflation spikes, and what do? We We say, whoa, we're pulling back on that stuff, where we say, okay, if I don't need this, I'm not going to spend money on it. And compared to, say, Walmart, which is their big competitor,
right,
Target was selling more of these things that really most of the people could do without.
Okay.
So people would siphon money off from these non-essential items, go to groceries. Walmart kicked their tushes because they were doing more groceries. And now to bring people back after actually seeing lower sales for last year, first time since 2016, Target says we're slashing prices.
Interesting. I love my local Target. I always start with the basket, but then have to upgrade the cart.
Yeah, exactly.
That's a me problem. All right, so with people saving money potentially on their shopping, what are they doing with their financial goals? What are they going for?
I feel like the through line of what we're talking about is the after effects of inflation, right? Because now Target is saying, uh-oh, we raised prices too much, we got to get people in the store. People are saying, wow, this inflation has really done a number on me and how I think about my financial life. So we're very good at going and saying, oh my gosh, today I have to pay the rent. I will do what I need to do. Long term, when people would say, how do I define my financial success? They would say what? They would say, oh, you know what? I want to actually be a millionaire. I want to start a business. Now they're saying it's safety, it's security. And the thing that's very interesting to me about this is people seem to be doing this alone. What they don't realize is you have to work hard, but you want to get your money to work hard. And that means we have to do a better job of helping people learn how to invest.
So it's in the news the other day, stocks going up. Dow hit a record high recently. Is now a good time to start investing if you haven't done so before?
I think if you've got a long time horizon, it's always a good time to invest.
Okay.
And long time horizon means you got 10 years, 20 years, 30 years. What we're trying to do is get people to see that if you put money to work over the long term, your money, what you're trying to do with investing is you're trying to grow your money faster than the rate of inflation. That is the whole point of investing.
Yeah.
So how do you know what to buy, Jill?
This is a great question.
Yeah.
Thank you, Gayle. So what the problem is that people think they have to find the next best investment. They don't have to. What they have to do is have what we call a passive approach. You buy something that replicates the whole market, the whole stock market, the whole bond market, commodities or physical assets. You spread your money out. That's called diversification. And you do this over and over every pay period. Small dollars add up to a lot. I want to remind everybody, because people are hearing records and they hear about meme stocks, you don't have to be so scared. It is not about timing the market. No one can time the market. It's about time in the market.
Ooh.
You have to put your money to work. Keep it there, not shoot yourself in the foot. Try to find the next best thing and stick to your game plan.
That's a good point. Not timing the market, it's time in the market.
Correct.
Stable, familiar, valuable stocks work, right?
Yeah, and
All
an
those
index
blue chip
fund,
stocks.
will always keep you out of trouble.
All right, Jill Schlesinger, we appreciate you.